What is up, investors, and welcome back to the Everything Crypto Show, where we bring you the latest and most important news moving the crypto markets every single day. Now, we are back today with a crucial market update as Sam Bankman-Fried has finally given his official testimony after being arrested by the Bahama authorities yesterday. Then we got Binance, who has experienced some massive customer outflows over the past month at the same time that Crypto.com has over doubled the amount of customer inflows onto their platform. And last but not least, we got to talk about Crocoin with the record 4 billion burn in one transaction. And I have seen quite a bit of misinformation floating around about this burn on the internet. So I do want to clarify what happened in this video and if this means good things for Crow or if it is inconsequential. So without further ado, it is time to sit back, relax, grab that morning cup of joe, and enjoy the show. Happy Thursday, everyone. If you've not yet hit that sub, like, and notification bell, please consider doing so and joining the Everything Crypto Squad, and I love and appreciate you all. Now, we're going to hop right in here with the question of the day, and today's question is, do you think that Crypto.com will surpass Binance one day to become the #1 crypto exchange? Let me know in the YouTube comments down below. And now we're going to hop right into the charts here. And I do want to talk about what happened here on the charts, as we did actually see the FOMC meeting minutes today, which in my opinion did paint a pretty bearish picture overall for 2023. This has been a thesis here on the channel that we're probably not going to see any sort of significant movement in the crypto markets until 2024 when the Bitcoin halving does occur. And therefore, I'm pretty much treating any bounce we see to the upside as a dead cat bounce at the moment, as I do still believe that we are due for one more capitulation phase here before we actually enter the accumulation phase. So you guys know my targets here for Bitcoin. We are looking for that $12,000 level. And I do sincerely hope that you did not get caught in this bull trap today, as we did see a little fake out here above the 50-day moving average, moving up all the way here to 18.2K. Now, we have discussed here on the channel how Bitcoin has made this bear flag pattern once, twice, 3 times, 4 times, 5 times, and it looks like it is in fact actually setting up for its 6th bear flag here. And if I do extend the pattern, you're going to see that once again, Bitcoin did in fact get pegged right at the top of this bear flag uptrending channel, and therefore I do think it is pretty likely that we are going to break back below 17.5K. That is a significant level of support and resistance, as it is in fact the June low. And I do still think that we are due for that $12,000 Bitcoin. So I continue to dollar cost average regardless, but I am waiting for 12,000 to offload a bigger bag and actually get myself some more Bitcoin. And given everything that is happening right now in the crypto market itself, and then you got to think about the broader economy as well, I simply don't see any reason that Bitcoin is going to go ahead and reclaim that $20,000 level anytime soon. And especially given the fact that we are effectively in uncharted territory here for Bitcoin. If we take a look at the 200-week moving average heat map, which pretty much shows you guys that the 200-week moving average has acted as an amazing buying level since Bitcoin actually began all the way back here in 2010. This data does come in since 2011. And you can see that if you had bought back here in 2011 on the 200 week, back in 2015, in 2019, even in 2020, then you would have made a killing off buying off of this technical indicator. But if you did actually buy here in 2022, then you would have gotten wrecked, okay? Because the 200 week was sitting at about 22,250, and Bitcoin is currently trading just over 18K. And just suffice to say that although it may look bullish right here in the short term, in the long term, it actually is pretty bearish. If we actually take a look here on the yearly chart, you're going to notice we are still well below that 200-week moving average, and to actually make that move, we'd have to actually rally here about 37%, something I don't think Bitcoin is going to be doing anytime soon. Now, you guys know I am a crypto maxi, a perma bull regardless, but that is what I'm seeing on the charts. And then similarly for Ethereum here, also actually getting pegged right at its 200-week moving average, which is sitting at about 1349, and you're going to notice that Ethereum's high of the day actually came in at 1352, so the 200-week acting as a strong level of resistance. And then not to mention that we have that 2018 all-time high at 1400, which I do also expect to act as a key level of resistance for Ethereum. Now, my price target for Ethereum is 650. That is what I am waiting for. So Bitcoin 12,000, Ethereum is 650, and that is when I will be buying a more substantial bag of both of these projects, which obviously are the two most solid ones in the crypto market in my opinion. Now, we're also going to take a look here at Bitcoin miners real quick, because this is one of the key events that I do think is going to actually lead to this next phase of capitulation. And that's what I want to talk to you guys about. So you're going to see here how the hash rate has been pretty much ripping ever since this bear market began. Like Bitcoin, if we actually to go and take a look here on the yearly, Bitcoin, the price has been declining here at the same time that the total hash rate has been soaring. Pretty much anytime the hash rate has pulled back here, as some miners have been forced to stop operating, new miners have taken their place pretty much instantly and picked up the pace once again on this total hash rate. And once again, this time is no different. So we actually did see a pretty nice pullback here on the hash rate. I was hoping for some minor relief, and that does not appear to be the case, because this hash rate is once again correcting incredibly quick. And I do think it is once again headed to retest these highs here if the prior bear market history is any indicator. I mean, not the prior market, this current bear market, because the hash rate has just been ripping relentlessly. Now, this is a bullish sign because it indicates that as miners are falling off, more and more miners are looking to take their place, and effectively it is survival of the fittest at this point. Miners are getting squeezed, and that is definitely reflected here in the miner revenue, which is essentially back at 2020 levels here. You factor in the lowering price of Bitcoin versus the US dollar, then you factor in the rising cost of energy, and you can see why miners are definitely struggling here. Now, in terms of network difficulty, we did see a pretty nice decline here based on the declining hash rate, but now the hash rate is once again ripping to the upside. I do also expect the network difficulty to also increase. So that is sort of like the bearish on-chain statistic when it does come to Bitcoin, is that I do think that miners are due for more capitulation. Something that is bullish and could be contributing to the positive price action here actually is the amount of Bitcoin leaving exchanges, which once again has seen a nice little increase here, down from 2.17 million down to about 2.116 million. And this obviously does have to do with the bank run that did occur on Binance, and we are going to talk about that later in this video. But first, I do want to also walk you guys through Ethereum here. And again, like if you take a look at the on-chain data, everything does look incredibly bullish for Ethereum. Like if we look at the on-chain data, at the fundamentals of these projects, both Bitcoin and Ethereum are stronger than ever in my opinion, but they are suffering from some of the contagion in the broader crypto markets and the overall economy. I definitely do think there is a disconnect here between fundamentals and price that I am looking to take full advantage of. That is why I am dollar cost averaging and hoping for those lower prices in the future to load the boat. Now, you're going to notice here that the amount of staked Ethereum is coming in at 15.6 million. We have about 120 million Ethereum right now in the total float. So over 12.5, 13% of all Ethereum is in fact being staked on the network. And then active validators sitting here at 487,000. And this is once again pretty much at all-time highs. So everybody is validating the Ethereum network here. Not everybody, rather more people than ever are validating this network to get a piece of those juicy staking Ethereum rewards, and more people are staking their Ethereum, despite the fact that all Ether is in fact locked up right now until the Shanghai upgrade. Now, I do want to hop into the FOMC meeting minutes here, as the US did announce the 7th interest rate hike of 2022, and they actually went ahead and raised interest rates by 0.5 percentage point today. So the Fed boosted its benchmark rate a 0.5 point to a range of 4.25%, up all the way up to 4.5%, its highest level in 15 years. Though lower than its previous 3/4 point hikes, the latest move will further heighten the cost of many consumer and business loans and the risk of this impending recession. Now, policymakers are forecasting that their key short-term rate will reach a range of 5% to 5.25% by 2023, and this suggests that the Fed is prepared to raise its benchmark rate by an additional 3/4 of a point and leave it there until the end of next year. So this definitely means that although we have seen a slowdown in the rate hikes, that they are not done hiking, that loans are going to get more expensive, that the Fed is going to continue squeezing the economy, even though we are seeing some signs of inflation cooling, actually coming down to 7.1% after that 9.1% peak back in June. And I mean, Jerome Powell did say here that the inflation data in October and November shows a welcome reduction, but it will take substantially more evidence to give confidence that inflation is on a sustained downward path. So the Fed is not dovish yet whatsoever. They are still hawkish, and therefore I do expect more turbulence in 2023 in the economy, not to mention all the nonsense that has been going on in the crypto markets alone, right? So that is why I am definitely expecting a bit of a volatile year before we do enter entered that accumulation phase in late 2023, early 2024. Now, Sam Bankman-Fried did actually testify today, and there were 6 main things that he did say in today's remarks. Number one here is that he deeply regretted signing the papers that led to FTX starting the Chapter 11 bankruptcy process a few days after he said the exchange could become potentially insolvent. And here you can also see he said that customers could actually be made whole again because he is still aware of serious offers for financing amount to billions of dollars that could potentially save FTX and refund all of the money. However, he says, I believe that all of those are conditional on FTX being restarted as an exchange. And this is something that I definitely think would be tougher. I think that even if Sam Bankman-Fried was no longer with the company, that it would still be incredibly hard to regain the trust of people and actually have FTX as an operating exchange. He also talks about Alameda Research's financial position here, which had substantially over $50 billion in late 2021, and now he believes they have about $11 billion in assets and liabilities. And obviously, that was not Alameda's own capital. That was the capital of FTX customers that was being used to trade over at Alameda Research, which did effectively land FTX in a lot of the trouble that they are currently in. Now, deflecting responsibility, sort of. I mean, this is classic Sam Bankman-Fried, starting off with an apology saying that he effed up like everybody knows that he did, and then moving on to right away begin to deflect the blame. And this actually was all deflected on Binance CEO Changpeng Zhao. And we're going to talk about Binance in just a little bit because they have definitely been under attack of some serious FUD, but the on-chain data shows that yes, people are in fact withdrawing from Binance, so this FUD is working. And we're going to talk about exactly what this means for Binance and Crypto.com in just a couple of minutes, but I definitely have noticed this coordinated media attack on Binance over the past week. Now, we actually did warn over the weekend about some of the red flags in their audit that the media definitely has caught a whiff of just this week, and they have really been running with it. Now, you factor in that both Sam Bankman-Fried and Kevin O'Leary are openly blaming Binance for the collapse of FTX, and we're going to talk about that. But yeah, definitely Binance is experiencing some outflows at the moment. Regardless, I do think that Binance is going to be completely fine and weather the storm of this crypto winter. He says that the potential Binance buy of FTX likely never had legs. This is also something that I agree with. I don't think that CZ ever had the intention of acquiring FTX after forcing them into a liquidity crunch. At the same time, though, you cannot blame this on CZ. It is Sam Bankman-Fried's fault that CZ was able to single-handedly crush this entire exchange by simply dumping their native token. So that is not on CZ at the end of the day. That is on Sam Bankman-Fried. CZ pretty much just exposed FTX for what it was underneath the surface, and then addressing some other claims like poor risk management oversight. Yeah, you can definitely say that, to say the least. I think the key takeaway here for me personally is that customers could potentially be made whole again, as there is some serious offers for financing that could potentially make FTX once again fully operational. This is the biggest thing that I am concerned with, as obviously I want to see everybody get their money back, but this could also be Sam Bankman-Fried completely blowing smoke up everybody's ass, which I would also not be surprised about at all. So time will tell if that is in fact the case. And after this testimony, it was in fact confirmed that there will be no bail for Bankman-Fried, as he did leave the Bahama court in handcuffs. You can see that in this video here. I'm actually going to zoom in. You can see that this is actually post-testimony here, I believe. And you can see they're actually zooming in on Sam Bankman-Fried when he does in fact come out. Where is he? So here's the video of them actually walking out here. And yeah, you can see Sam Bankman-Fried. I believe he's actually right there in the suit there, all cuffed up. And yes, he is not being allowed bail, and rightfully so. I don't think that he should be allowed bail, as federal prosecutors in the U.S. Attorney's Office in New York have charged him with an 8-count indictment. 2 counts of conspiracy to commit wire fraud, 2 counts of wire fraud, conspiracy to commit securities fraud, conspiracy to commit commodities fraud, conspiracy to commit money laundering, and conspiracy to defraud the United States and commit campaign finance violations. This would obviously be referring to his outsized donations to the Democratic Party that were fully public, and obviously this was not with his own money. This was actually with FTX's money, which was essentially his customers. So definitely lots of charges flying here for Sam Bankman-Fried, rightfully deserved, and he has been denied bail until this is all sorted out. I believe I read somewhere that he is now pretty much going to be locked up until February of 2023, me? Yes, and that is in fact when the extradition hearing is set for him. So that'll be interesting to see. And now we pretty much need to wait to see how this does play out in the meantime. So moving on here, this is actually what Kevin O'Leary had to say today. So he went ahead and obviously blamed Binance for putting FTX out of business. We know that Kevin O'Leary was paid $15 million to support FTX, but why he is still supporting them after they've already fully collapsed is beyond me. But I do want you guys to actually listen to this brief clip here, and I want to hear what you guys think about this. So,
why do you believe FTX failed?
I have an opinion. I don't have the records. Here it is. These two behemoths that own the unregulated market together and grew these incredible businesses in terms of growth were at war with each other. And one put the other out of business intentionally. Now, maybe there's nothing wrong with that. Maybe there's nothing wrong with love and war. But Binance is a massive, unregulated global monopoly now. They put FTX out of business.
Why do you...
So, interesting clip to say the least. I mean, I don't disagree that they did put FTX out of business, but once again, I also don't think this is the fault of Binance. I think that Binance simply saw a weakness in a competitor and took full advantage to shut them down. I think this was definitely intentional on CZ's behalf, something that we have been talking about here on the channel pretty much since this did happen. I think the bank run began on November 6th, and on November 8th, they did actually sign this non-binding letter of intent to buy out FTX. I said the most likely would not go through, and it didn't even take 2 full days for Binance to actually reject buying FTX. Once again, I mean, Kevin O'Leary just kind of like ignoring the main point here is that FTX only got run out of business by Binance because they put themselves in a scenario where they allowed this to happen. And that's the main thing here. So definitely interesting to hear that. And the other point that he did make is that Binance is now effectively a global unregulated monopoly on crypto exchanges. And that is something that can actually be seen here in terms of the total value locked on the Binance platform, although it has seen a pretty steep decline here since November 11th. So here's what I actually tweeted today, and we are seeing a ton of outflows from Binance at the same time that we are seeing some massive inflows into crypto.com. Granted, crypto.com is still very far away from reaching the actual total value lock that Binance has, but this definitely is a move in the right direction. So November 11th, Binance actually had 67.94 billion in customer assets, and as of December 14th, they are down to 59.8 billion. That is a negative 11.98% change in this month and a couple days time period. Now, crypto.com here coming in with total customer assets of 143 billion on November 11th, and by December 14th coming in with 3.43 billion in customer assets. That is an increase of 139.86%. So clearly the FUD for crypto.com that actually ironically the Binance CEO tried to start here, it failed. It put a ton of attention on crypto.com, and after they survived this bank run, I guess a lot of people realized that crypto.com is in fact being responsible with their customer funds and felt safer depositing assets onto the platform. So I mean, definitely a step in the right direction here to see Binance losing just under 12% of customer assets in the past month and a couple days period. At the same time, the Crypto.com saw just under a 140% increase in customer assets. And on this note of Crypto.com, I do want to wrap things up here talking about the native token CRO coin. We know that CRO is one of, well, I know that it's personally one of my favorite altcoins here on the channel alongside Quant. And I do want to talk about this massive 4.2 billion burn that did in fact take place 13 hours and 53 minutes ago at the time of this recording. Now, obviously, this is turning a lot of eyes on Twitter as it puts the dead wallet balance up to $82 billion. And if you actually take a look here at the burn history in the past year, I mean, you can see how significant this is, right? Going from the 76.6 billion CRO burned all the way now up to over 82 billion CRO burned. Ooh, I need to sneeze. Whew, okay, that hit the spot. So, obviously, this has, turned a lot of heads here, seeing this massive CRO coin burn, as removing 4 billion CRO from the float would be a massive deal, considering it has a total supply of 30 billion CRO. But unfortunately, this is simply not the case, okay? There is a lot of misinformation out there that I do want to address, and I do also want to issue an apology to you guys because I have also previously misunderstood this data. So I want to clarify exactly what is happening here with these crow burns, show you guys what is happening based on the crypto.com official documentation, because I am here to give you guys the facts, not to make stuff up, to make things sound better than they are. I am here to give you guys the facts and exactly what is happening. So I'm going to walk you guys through this, and once again, I do apologize for misunderstanding this in the past. So simply what is happening here is Crow coin was officially launched, or initially launched on Ethereum, so it was an ERC20 token. Now, when the Crypto.com team actually made the Crypto.org chain for their crypto pay platform, this was effectively meant to be the next generation public blockchain that enables transactions worldwide between people and businesses. You can check the crypto pay app within the Crypto.com main app, or rather the tab, and that is utilizing the Crypto.org chain, which it was intended for. So effectively, to do this, you had to bridge all of your Crow from Ethereum over to the Crypto.org mainnet. And how this effectively happened here was in a couple of different ways. So by actually sending your Crow through ERC20 to the Crypto.com main app, you can then withdraw it via the Crypto.org chain. Every time you do this, every time you send Crow via Ethereum, you are burning it on the Ethereum side and then minting it once again on the Crypto.org side of things. Another way you could do it here is through the Crypto.com DeFi wallet, in which you could actually just go ahead and use the bridge feature to bridge your ERC20 Crow over to the Crypto.org Crow. That is another way to actually go ahead and burn Crow on the Ethereum side. And then, yeah, once again, using the Crypto.org chain migration web tool, which is the bridge we talked about there in the DeFi wallet. So essentially, what these burns are here, quite simply, is every single time somebody is moving Crow from an Ethereum address as an ERC20 token over to the Crypto.org chain or the Cronos chain, the ERC20 Crow is being placed in this dead wallet, because effectively the team is looking to remove all of the Ethereum Crow from the float and only have Crow exist on the Crypto.org chain and the Cronos chain. So lots of information out there. Once again, I do want to apologize for any time I have misinterpreted this data. This is not Crow being burned on the mainnet. This is Crow being burned via ERC20 and then being minted again on the Crypto.org and Cronos side of things. Now, this does not mean, however, that we are not going to see additional Crow burns in the future on the actual native chains. And additionally, I do want to point you guys towards some very key data that I think makes the point that Crow is in fact a lot more scarce than people do expect. So for starters here, you're going to notice, if we actually take a look on CoinMarketCap, that yes, we do actually in fact have Crow coming in here with a total supply, with a max supply of 30.2 billion. So 30.2 billion Crow max supply, circulating supply of 25 billion. That right off the bat is incredibly bullish, because it means that over 75-80% of all Crow is already circulating, and that there is not that much Crow left to actually be dumped on the public markets. And I'm pretty sure that the rest of this Crow is actually being distributed via staking rewards for the Crypto.org mainnet validators. So keep in mind this 30 billion mark, and then we're also going to take into account the 5 billion Crow being delegated to the Crypto.org mainnet staking, and the 6.85 billion Crow that is in fact locked up here on the Cronos chain. And effectively, you're going to see right off the bat that just under 12 billion Crow is locked up here with just in between its two native chains, okay? So right now we have a circulating supply of 25 billion. Then you factor in the 12 billion of that is in fact locked up between the Crypto.org mainnet and the Cronos chain. And you have just under 50% of the total Crow supply already really like accounted for between these two different blockchains. And if you're factoring this in based on the total supply of 30 billion, that is just over 33% of all Crow just locked up between these two blockchains once again. Now, I do expect this to actually continue to increase as time goes on, as more and more people really begin to realize the power of the Crypto.org mainnet staking for that 11+% APY, and also the amount of staking you can actually do via the Cronos chain and their different dexes. So I do hope this does kind of clarify what happened with this 4 billion Crow burn. Unfortunately, it is not not CRO being removed from the flow forever, but that does not mean that the Crypto.com team will not do this again in the future. In fact, I would not be surprised at all if we did see additional burns. I think the BNB token has like a total supply of 200 million, and I don't see any reason that Crypto.com could not also continue to burn CRO in the future and essentially do good by their token holders. So without further ado, I hope you guys did enjoy the content in today's video. You know what to do. If you made it all the way to the end, you are an absolute champion. Let me know in the YouTube comments down below and claim that champion status. I hope you are all having an amazing Thursday, and I hope to catch you in the next one. Peace out for now.